Need computer training for a group or office? Contact us today to get a free demo of our training at www.teachucomp.com/enterprise-licensing.
A fixed asset account tracks assets that your business owns that are not likely to be converted into cash within a year. A fixed asset is usually something of significant value that is necessary for the operation of your business, like vehicles, computers, furniture, and some types of office equipment. Many times, the purchase of a fixed asset will also incur a long-term liability, such as the example of acquiring an auto loan to purchase a new vehicle. Fixed assets are not for immediate sale, but they do have a value. Since they are useful for a long time, you don't completely charge their entire cost to the year in which you purchased them. Instead, you spread their cost over several years, which is called the useful life of the asset. However, because fixed assets wear out or become obsolete, like computers, their value declines constantly from the day you purchase them. When the value of fixed assets decline over a period, the amount of value that is lost is called depreciation. The total amount of this decline over a period of time is called accumulated depreciation. We will now examine one method for creating fixed asset accounts, noting their original value and also recording their accumulated depreciation. There are many ways to track fixed asset value and depreciation, and this is just one suggested method. This method works well to show the original cost, the accumulated depreciation, and the current book value for a single fixed asset on separate lines within the balance sheet for clarity of reporting. However, if you are currently tracking your asset depreciation in other ways, you can rest assured that you can continue using your own method. When you refer to the value of a fixed asset at any point in time, you are referring to its book value. This is determined by subtracting its accumulated depreciation, which is the total amount of depreciation that has occurred since the asset's original purchase date, from its original cost. Usually, you will want your company's balance sheet to show the original cost of an asset on one line, with the accumulated depreciation subtracted from the original cost on a second line, and the current or book value on a third line. The method that you will learn in this lesson allows you to see each asset's cost and its accumulated depreciation separately on your balance sheet. In order to do this, you need to create a primary fixed asset account for each asset, and then create two sub-accounts under each primary fixed asset account, one for the original cost and one for the accumulated depreciation. First, create a new primary fixed asset account within the chart of accounts list. Leave the opening balance field blank if you're purchasing the asset after your company file's start date, as that value will be determined by the two sub-accounts, original cost and accumulated depreciation, that you will need to create to track its book value. Next, create the two fixed asset sub-accounts, one for the asset's original cost and one for the asset's accumulated depreciation. These two sub-accounts should also be of the fixed asset account type. When creating these accounts, ensure you click the checkbox for Sub-Account Of within the New Account window, and then select the correct primary fixed asset account for which these sub-accounts will track the original cost and depreciation from the adjacent drop-down menu. Now, when creating the original cost sub-account for assets purchased before your company file's start date, enter the opening balance as the original cost of the asset. For assets purchased after the start date, leave the opening balance field blank, as the value of the asset will come from the value of the transactions that you still need to enter, such as a loan to repay or checks to write to purchase the fixed asset. When creating the accumulated depreciation sub-account, The amount you enter as the opening balance also depends on whether you acquired the asset after or before your company file's start date. If you acquired the asset after the start date, then leave the opening balance field blank. If you acquired the asset before your company file's start date, then enter the accumulated depreciation of the asset as of the start date as a negative number.
Like what you see? Get a free demo of our training for groups of 5 or more at www.teachucomp.com/enterprise-licensing.